Breaking news, the Fed just raised their rate 0.75%, the biggest rate hike since 1994. Now this might sound scary, but it's actually really good news. So as we've discussed before, the reason the Fed raises their rates is because they're trying to fight inflation. So normally you think, oh my gosh, the rate's going up, all of our rates are going up. Guess what? All the rates are already high, but that's because of inflation, not because the Fed's been raising their rate. So what the Fed's trying to do is control that inflation. If they can control inflation, rates will actually start coming back down, which will help us out tremendously. So inflation has been hurting the stock market, it's been hurting the bond market, it's the reason why rates are higher. You've seen it at the gas tank, you've seen it in the grocery store. It's really been a big problem this year. So the Feds, yes, they're late doing this, but they're doing everything they can now to catch up, to try to get inflation back under control. And so hopefully this 0.75% jump is gonna really show the markets that they mean business. Now, if you kind of think about this like Goldilocks, it's not too much, and it's not too little. 0.75% is actually just right. Now, if they had to raise their rate more, like say 1% or 1.5%, I even saw a financial analyst calling for 3%, that's gonna show the markets that the Fed is panicking. They're nervous, they can't control inflation, and they don't see any way to do anything besides that, so they're gonna go full throttle on it. That would be really bad. Now, the other end of that spectrum is if the Fed only raised the rate like 0.25% or 0.5%, now the markets are thinking, oh my gosh, the Fed has no clue what they're doing. They're already a year late to get this done, and now they're not raising rates enough. So 0.75% is Goldilocks in this scenario, so it is the perfect thing that the market needed, and the market is showing it. Stock market's better, the bond market's better, and I really think the Fed's on a good path now to help us get inflation back under control. So short term, the markets take this as a positive. It reflected in the market today, and it's gonna show some signs of stability. Now we hope that's gonna stay the same, but it isn't always the case. Long term though, this is where we're not really sure what's gonna happen. Can the Fed actually get inflation under control and do what's called a soft landing? A soft landing meaning we're not totally crashing the economy and going into a full-blown recession. Most analysts are predicting a hard landing, big recession, stock market's gonna get hurt, but rates will come back down. So from a mortgage perspective, that's actually a good thing. So yes, while it might be kind of scary news when you see the biggest rate hike since 1994, it actually is a good thing. Maybe short term it'll create stability, but long term it should really help out. And I really think that we'll start seeing mortgage rates start coming back down by the end of the year. If you have any questions, let me know. And if you like this video, definitely subscribe to my channel and make a comment.